Okay, hi everybody, this is Gary Wilson, and welcome to this week's live Investor Agent weekly webinar. I appreciate you guys being online, and welcome aboard to everybody who's also taken Flipping for Profits training program, or rental profits is either pain or turning rental problems into real estate profits. And just a reminder, wholesaling is officially in edit mode. We should have that completed by the end of December, and then we have a lot of other work to do behind the scenes, but we should be rolling that out sometime in the first quarter, no later than March. Tonight, what I thought I would do, since a lot of people have been asking about this, is go over a blueprint of wholesaling. So for all of you guys who've wholesaled before, definitely stay on, because I'm going to show you something that's going to really open up your eyes about wholesaling. I'm personally don't do it anymore. But it's a personal thing. It has nothing to do with the business or whether or not it works. It absolutely does work. But I'm going to show you how to get paid as many as 5 times off a wholesale transaction. Okay, that's you being the agent and you're working with wholesaler and traditional clients. Tonight I'm not going to get into a lot of the infrastructure, like whether you should wholesale or do net listings in the states that allow net listings. I'm also not going to get into setting up LLCs and all that. We'll do that in separate webinars. Tonight we're simply going to focus on the big picture, what we call the blueprint. I'm also going to go through a checklist with you, because a lot of you, I can tell based on the questions I'm getting, that you're involved with wholesalers. I want to make sure you're not only serving them, but also positioning yourself for profit. Okay? And the third thing is, if we can get to it, is show you how to actually offer and present a wholesale deal to a prospective investor. If we don't get to that, we'll do that next Monday the 28th, which is our next webinar. So in any case, let's get to it here, guys. First off, for all of you who are new, welcome aboard. A little bit of housekeeping. You'll see that you have a question box that you can type in questions, and I'll review those periodically throughout the webinar and answer those questions. If you, from time to time, I will unmute you and bring you on live, okay, depending on the circumstance. If you have an active transaction you're working on, for example, and you need a little bit of help, or you have specific questions related to a specific transaction, sometimes I'll unmute you, we'll talk about that, and everybody will benefit from that Q&A. If you're listening to this recorded, because you're not live here tonight, you're going to get the recording tomorrow, you can keep it. You can download that, spin off do it like an MP3 audio. There's an app you can get for free to do that. You can also get an app for free, GoToWebinar free, on your phone, where you can watch it on your phone if you happen to be in a doctor's office waiting, or you're at a open house and waiting for people, that kind of thing. All right, real quick, it looks like some questions came in, so hang on 1 second here. Let me make sure. Let's see. This is Ronna, my broker and my escrow officer won't touch wholesaling. Why? Ronna, honestly, a lot of it's just limiting beliefs. I can tell you the primary challenge, if you will, which is rational, and I'll explain it here in a second, is that, see, when you're wholesaling, you're selling the contract, you're not selling the property. The property will get sold, but if you look at your screen here, you'll see there's property A, which is owned by, let's just say, party A. You've got party B, the wholesaler, and party C, the eventual buyer. Party B is going to take a wholesale fee in this deal, which essentially amounts to a portion of equity in the deal. Okay? And so fundamentally, all of us brokers, agents, team leaders, OPs, what have you, some of us feel like, well, if somebody is in the middle there skimming off equity, which essentially is what it is, taking a portion of equity for the privilege of finding a deal and presenting the deal to someone else, they're really not adding value to this deal. They're not adding value to the transaction. They didn't approve the property, they didn't clean up title, they didn't do any of those kind of things. Okay. And that equities, in the eyes of sometimes team leaders, OPs, and brokers, that equity is viewed to be really better suited in the hands of the buyer. Okay, the buyer's taking that property off. So that's the fundamental issue people have with wholesaling. I decided years ago to not participate in it, but I still teach it because it's a valid subject. It's part of the program, and I need you guys to understand how it works fundamentally and how to protect yourself legally in a wholesale transaction, because it does happen all the time out there. It is still legal. However, I will tell you, since the subject came up, 2 states, namely New York and Ohio, are currently working on legislation to stop wholesaling in those states. Now, I've been around long enough to know that whenever legislation comes out related to any subject, it's just a matter of time before entrepreneurs figure out what the loopholes are. And so the show will go on. I can pretty much assure you that. There's been discussion of this going back to the 1970s and 80s, and it's gone back and forth. It's been hot and cold and all that, but it never goes away. So in any case, so Rhonda, I would, if you represent a wholesaler, let me tell you, listen to this. Let's go through some examples, and you can see what role you can play and how you can actually profit from this. I don't know how a broker can say they won't process a transaction that resulted from a wholesale deal, because it's still a legal transaction. I mean, somebody's buying a property from somebody else, So let's go through this, and it might help you when you speak to your broker. I don't want to step on anybody's toes. They certainly may know a lot more than I know. I just want to show you what we do and what we teach and why we teach it and how it works. And then you guys can make up your minds here whether you want to pursue it or not. But we do have agents in KW who do this all the time and make a lot of money doing it. Okay, so let me go ahead and run through this, and then we'll pause and take questions. So let's go through the first things first here. I'm going to reduce my panel and make more of my screen available for me, hopefully for you too. Let's go through this. So first things first is the picture, wholesaling blueprint. 3 parties, A, B, and C. Okay. Party A, let's just say, is really the house for sale, i.e. the seller, or the owner of the property. Party B is a wholesaler. All right. Party C is the buyer. Now, if you're new to this and you're not really sure what wholesaling is, just hang in there. It's going to be a lot more apparent here in a few minutes. Fundamentally what this person here is doing, Party B, is getting the property under contract. They're not buying the property. What she's doing is selling the contract to this person over here, Party C. And Party C ends up buying the property over here from Party A. Okay, and Party B collects a fee, a wholesaling fee out of the whole deal. They basically, let's say at closing, they collect a $100,000 deal, they collect $10,000 wholesaling fee. Okay, that's in the nutshell what's happening, but let's get a little bit more specific here. Okay, let's go down here. I'm going to take the 2 people out of the picture so we can focus on contextually what's happening. All right, first off, Party A would like to sell their house. House is A, okay? Party B gets the house identified as A under contract and earns a wholesale fee, basically an assignment fee, because what you're doing is you're assigning the contract from Party B is assigning the contract to another party, in this case, Party C. Party C purchases the sales agreement from Party B, or the right to purchase the property, that is. Okay, so Party C initially is purchasing the right to purchase the property. That's called an assignment or a wholesale from Party B, who originally got in the contract. So Party B has what's called contractual equity and owns the buyer portion, the buyer degree of that contract. Okay, and he or she, if she words the contract, the sales agreement properly, can assign or sell the contract, which is in this case what she's doing. Sells it to C. C ends up buying the house from A, from Party A, ends up buying, so Party C buys house A from Party A. All right, so that's really what's happening here. You've got 3 people. Let me bring this back up here. Okay. B, I'm circling her now, gets property A under contract. She doesn't actually buy the property. She takes the contract in her hand and sells it to this guy over here. He pays her whatever, $5,000, $10,000, $1,000, whatever the case is, for the right to that contract, and now he has the right to purchase this property from party A. That's fundamentally what's happened, but it gets better than that, guys. Okay, here's why I want you guys to hang in there. All right? If you notice, nowhere in the prior example did we ever mention a real estate agent, okay? That's because a lot of wholesalers are operating independently. They may or may not be agents. If they are agents, they really need to take the wholesaling program that we have coming out in the first quarter. By the way, you can get the electronic version of the book already by going to the website, my investment services website. You can get it for free. It'll explain a lot of this in kind of plain English terms. But in any case, back to this. The next step is this. Here's where you come in. You might think, well, why would I want to get involved with a wholesaler if that's all they're doing? Well, here's why. Okay? Remember, in order for a wholesaler to be successful, he or she's got to find properties, number one, which sounds like what? Sounds like an agent can play a role here. Okay? And also, this person better hope that she can find a buyer to come along later on and actually buy the property or she buys the asset first. The agent to get involved and earn a commission. Let's go down and see what that looks like, okay, on paper. I'm going to read this to you. It's going to take a little bit of time, and we're going to go back and go through an example, right? So enters the picture this person, an investor agent, all right? This is a real estate agent who, like you, knows how to work with investors. And here's what happens, all right? D, this is investor agent. This is D. Matter of fact, we'll just assume her name is D or Dee, all right? She enters into an agreement to represent party B, who is still the wholesaler, all right? They enter into an agreement. It's not necessarily an agreement where D is going to earn a commission. I'll explain what happens here in a minute. Okay, so now agent D, investor agent D, is representing wholesaler B. Agent D also now goes out there and finds the properties, all right, in this case, property A, gets it listed for sale. So investor agent D lists property A for sale. Party B, the wholesaler, steps in, who, by the way, is also represented by investor agent D, and gets property A under contract. It can be a pocket listing. You can put the listing on the MLS if you want. But the bottom line is you're getting a pocket listing here, essentially. So party B, the wholesaler, gets property A under contract. Right away, investor agent D has already earned one commission. Okay? Now, we're not done yet, because when party B gets this property A under contract, he or she needs to make sure a buyer comes along to buy the contract from her. In this case, investor agent D goes out and says, yes, I have a buyer. I found a buyer to buy the contract from you, Mr. or Mrs. B. They buy the contract, and then party C eventually does go and buy property A. So now, investor agent D, right, has earned, I'll just show you this here in a second, okay, a listing commission from party A fee from party B, not a commission, but a fee. You can call it a marketing fee. Marketing fee is the most common term used, from party B, all right? Investor agent A also earns a commission, all right, for representing the buyer, right, who buys property A. Actually, this should say C here, buyer commission. Let's make that C. Sorry about that. Okay, now I want to make sure I finish my dialogue up here. So, all right, so D finds the buyer C, represents C in purchasing the agreement from B, and ultimately buying the property from A. So A sells the property to C. Right? The wholesaler up here gets her wholesale fee. Party C gets the property they want. Party A gets the property sold. And all the while, he, the investor agent, collected a fee from the wholesaler B, collected a commission, actually both sides of the commission, from the seller, from A, for representing the seller and the buyer. So far, that's two commissions and a fee. So you can see so far how you as an investor agent can really profit and benefit from representing wholesalers. Because don't just think of it as a single-threaded process. You're not just representing the wholesaler. You're representing as many people as you can in this whole transaction. At a minimum, you should be getting at least one commission and one fee, and certainly if you're really on top of your game, 2 commissions and a fee, and it gets better than that. Okay? And here's why. Let me give you the example. Let's say the property that's being purchased here, sold and purchased, ends up being a great investment deal. Okay? And what that means is, in this situation, party C, the person who's going to buy the contract from B and eventually buy the property from A, has the intention of taking that property A, remodeling it, rehabbing it, what have you, improving the value of the property, and putting it back on the market to sell for profit. What that means is there's another commission that can be earned, another listing commission that can be earned by the investor agent D from party C when party C puts the house back on the market. Okay, thereby bringing in another commission, actually a third commission, 2 listing sides and 1 buy side so far. All right, and as you might imagine, yes, it gets even better than that, because the investor agent D could also find the final purchaser of the property who's going to purchase the property from party C once it's been remodeled. So let's look at that. Okay, so we're just going to repeat this. So say the property is to be investor agent D represents party C in listing the property once it's remodeled. D then collects another listing commission, as we stated before, and if D has a really good day and finds the final purchaser of the property being remodeled and sold by party C, thereby collecting yet another commission. So 2 more commissions. So 2 listing commissions, 2 buyer commissions, and a wholesale fee. All because investor agent D took this training program on wholesaling and figured all this out. And we do have an agent who does this right now. If you want to write her name down, feel free. Her name is Kelly O'Keefe. It's Kelli, and last name is O''Keefe. Yep, as you might imagine, she's Irish. She lives up in Boston, Mass. She's been doing this for over 10 years. Never bought an investment property her entire life. Does this exactly what I just described to you, and also teaches classes to investors. She's got all kinds of investor commissions coming in, left, right, up, down, backwards, forwards, because she uses two simple programs that we teach on how to attract and represent investors. Okay, so let me show you that, guys, just to give you the big picture of what, how, and why wholesaling can be so lucrative for investor agents. Before I jump into the next thing, I want to bring my panel back over and look for questions. So let me go back up to the top here, and let's see if we have any questions. Hang on one second. Let me get down through these guys. If you have questions, guys, now's the time to bring them up and ask them. And if you have a question on something else, by all means, let me know, and we'll interject that and cover that too. Okay, I think we're current on questions. So is it okay for me to go into the next thing I want to show you tonight? If you could just type in yes, move forward, whatever you want to type in there, go ahead, type that in, or type in, go ahead if you want. That'll give me the cue that it's okay to move forward. If you have questions, please let me know, guys, okay? So I'll give you a second to type anything you want to type in. We'll get started here in a second. Okay, let's see. Maxine says, yes, on with it. Okay, you got it. By the way, have any of you guys seen this before? What I just showed you, has anybody recognize the profit potential in the way that I just showed you? Let me do that. And we do have a question here from Wanda. Hi, Wanda. Wanda says, what is a typical wholesaler and how do you locate them? A couple things, Wanda. Typically a wholesaler, matter of fact, I would just get the book Wholesaling so Everybody Wins. It's on the website. That is going to be officially published probably in January, by the way. You'll still get it for free. But essentially, a wholesaler is somebody who wants to be involved in real estate investing, but typically does not have capital, access to capital, or even any hope of generating enough cash flow to accumulate capital, okay? And yet they develop the skills to be able to analyze flips and rentals and so forth. And their objective is to find properties, find deals that they can then put in the hands of the ultimate buyer. Sometimes it's just an owner-occupant who's just looking for a good deal. But in our case, it's another investor who doesn't have the time to go find the deals. So in other words, two critical parties in wholesaling. Party, let's just say party A has actually three parties. Party A has a property they want to sell. There might be something in some unusual circumstance about the property. It doesn't make for a good traditional owner-occupant type listing. And you have buyers out there who have money but no time. They have no time to be looking at properties. Okay, that's your party C. And you have party B. You have investors who have no money but yet they have time. So you're matching the people who have time with the people who have money to get the property sold for the people who have the properties. That's really what's going on here. The way you locate them is you can join your local investor club. Again, as you know, I'm a proponent of RIA, Real Estate Investors of America, and there are chapters in literally almost every sizable town in the country, okay, in the U.S. that is, different groups up in Canada. Larger cities have multiple RIA groups, okay. They also operate at the state level. You can join those groups and look for the people who are in there trying to be bird dogs. We call them bird dogs. They're out there looking for the deals. A lot of times they really don't know what they're doing, and you can step in and play a huge role as the investor agent, helping to find deals for them to turn around the wholesale to the other people who do have the money. Okay, so you can use a lot of traditional marketing techniques. In fact, you can use the booklet for different groups of people. The booklet generally is better used for people who have money, but if you think of other groups, like teachers, for example, sometimes teachers will like the wholesale because in some states they don't have very high salaries, okay? And they want to be involved in real estate investing. They may see wholesaling as the way to do it. So in other words, you're appealing to people with a tool that will attract them, even though they might not have a lot of money. You can tell them that you can help them find the properties that they can then wholesale to other people. So just one idea, one example of a marketing campaign you can use. But the easiest way is really just to join your local investor club, and over the few, say 2 or 3 months, you'll meet the people who are ideal wholesalers. Okay. Good question, by the way. Let's see here. Anything else? Let's see. Shauna is asking, what contract would be used between A and C? You're not going to find a contract like that in typically in your MLS systems or in your board's real estate forms databases. However, Shauna, you can use your buyer's agency form modified. So what you have to do is, where it talks about compensation, you put a note in there to say, please see attachment A or exhibit A or addendum A or something like that. And in that addendum or attachment or exhibit, you're going to specify that you're collecting a fee, a marketing fee from the wholesaler, and as opposed to a commission, okay? You don't have to get real specific on wholesaling or anything like that. You're representing them because technically, legally, they're a buyer. They're getting something under contract, okay? You know that their intention is to sell the contract, and the way you collect from them is you tell them for every deal, every contract that they sell, that you get a fee for that, a wholesale fee. That's the first part. The second part is this. When you write the buyer's agency agreement, guys, and this is really critical, again, I didn't want to get into this much detail, but it came up, so let's address it. You know that this person is selling the contract to another party. Right? The way that you ensure that you do collect a fee from the wholesaler and a commission, okay, is to say that the buyer's agency agreement is transferable to any party, any heir, subsequent owner of the contract, and fully enforceable okay, under those terms. In other words, the wholesaler B sells a contract to party C. You have in there that the terms under that agreement are transferable and enforceable to the new party. It's almost like a deed restriction. Okay, if you think about a deed restriction, same kind of thing, but you're doing it on a buyer's agency agreement. So, so good question. That was an awesome question. I appreciate you bringing it up, Shauna. Okay, this is from Castle. Castle says, questions. What cap rate is good for an investor? Where do I get 30-35% out of? Because as of now, I have been just calculating $1,200 per year. When I add when I add 30 to 35%, we are looking at more like 10 to 15K. Hey, Faisal, I think this was in the email I sent you back earlier today. So cap rates vary around the U.S. and Canada widely. I mean, there's parts of California, like up around the Bay Area, where people are literally buying properties at negative cash flow. I mean, they're looking to get 3% cap rates. Then you got people in, parts of Georgia and the Carolinas and the Rust Belt states that are getting 15% cap rates. So for your area, Faisal, I think what I said in the one email I sent back was you could be looking at anywhere from 4 to 6% for A properties at best, 6 to 8% for the B properties at best, and 8 to 10 for the C properties at best. That's best case scenario. It may be, maximum 8% cap rate for a C property in your area. You're in Paterson, New Jersey. Okay, so the way you find that out is you can literally Google cap rates for your area, and you'll have a couple of commercial outfits that will publish prevailing cap rates by neighborhood. Okay, it usually doesn't go to a neighborhood level, but sometimes it does. But for Paterson, you can find out what are the prevailing cap rates. That's what I would do. For anybody on the call, remember, every marketplace has different market dynamics. The fundamentals are the same. The fundamentals don't change. It's just the individual circumstances. Okay, the market data is what changes. So back to the other part of the question, Faisal, you're asking about where do I get 30-35% out of? I think you're referring to expenses. In the email I sent you, I'll say that would be a rough guideline. But your overall expense ratio, again, could vary widely. A lot of times depending on the age of the property. So if you got a 100-year-old property, man, you could be looking at 40, 45, even 50% of your cash flow coming in being applied to maintenance and repairs, water, sewage, garbage, taxes, insurance, the whole 9 yards. Okay, on a newer property, you might be looking at maybe 25%. Excuse me. Okay. And that comes out of that's on the expense side. So guys, if you think of a balance sheet has two parts, asset and liabilities, and the other part is income expense. On asset and liability, the assets are the actual holdings themselves, the buildings, what have you, stocks, bonds. Okay, liabilities are the loans, the principal amount of the loan. So if you have an asset of $1 million building and you have a loan of $700,000, that goes, the property goes on the asset side as $1 million, the loan goes on the liability side as $700,000. And then on the income expense sheet, okay, that property generates, say, $100,000 a year in cash flow. That's income on the income expense side, all right? And let's say all your expenses, maintenance and repairs, taxes, insurance, water, sewage, garbage, make up 35%. That gets deducted from the income, and then the remainder is your net operating income. So Faisal, I would use the first start off with the cash flow worksheet on any properties you're looking at, real basic one. It's right in your material, and then from there graduate to the opportunity evaluator, because you'll see right there income is up top on the left-hand side, and then down below on the left-hand side is all the expenses, and that calculator does the deductions from you. So the expenses come out of your income. That's the income expense side, all right? The asset liability part of that, if you look at look at the opportunity evaluator, look at the very top of that page. It tells you the purchase price of the property, assuming that's the real value. And then you also have below that your loan information. That's your liability. So asset liability up top, income expense down below. Asset liability reflects ownership and overall debt, and income expense reflects monthly income, money coming in, and expenses, money going out. Okay, I hope that helps. Let's see what else we have here, I think. Oh, this is from, let's see, who is this? Check the attending chart real quick. Let's see, I believe this was Nicodoans. Let's see what Nicodoans is asking. Hang on one second. Let me go back to the question box. Hang on one second, guys. Okay. So what is the best to find this kind of deal as a real estate agent? So if you look at the material, the training material, Nicodoan, you'll see in Chapter 1 there's a 3-step process we teach you on how to locate the right properties in the right areas. In Chapter 2 is how you actually analyze those properties. You have to go through those 2 modules consecutively to be able to answer that question. But that's the process. Again, the fundamentals stay the same, but every marketplace has its own unique set of dynamics and circumstances. So if you could do that, Nicodoan, that would be great. Study modules 1 and 2, and you'll have the answer to your question here. You've got to get outside the MLS is the main thing. The MLS is going to hamstring you. You're not going to really get all that's out there. As a matter of fact, a lot of investor transactions are not even on the MLS, okay? Okay, next question, Fassel says, also, do you have an outline for a meetup.com, because I created the NJ Law Enforcement Real Estate Investing Group, and I was denied, stating I was attempting to sell something and didn't say that in the content. So, Fassel, we have to have a strategy call on meetup.com, and generally what I'll do is we'll bring it up online on the computer, share our screen so we can see what each other is doing and walk through it. You shouldn't be blocked. I'm not sure. You're going to have to start over because I'm not sure what you keyed in as far as information goes. But obviously you've typed something in there that alarmed them. So let's schedule a one-on-one. We'll do it live on the computer so we can walk through that process. Now, just so you know, there is a recorded webinar on that subject. It is out on the member site. I think, in fact, there's 2 of them. So if you go look out there, go back to like late January, early February, you'll see one that talks about the workshop. It's the monthly workshop we want you to do. And in there we talk about and demonstrate meetup.com. So that will be a great primer, okay? Okay, let's see here. Fassel says, I know how to figure the cap rate and where to find out, but as an investor, where do you want to be? Well, again, so Fassel, if I was investing in your area, I'd want an 8% return. If I'm investing in, say, right below the Golden Gate Bridge in San Francisco, maybe around Stanford University, I'm gonna hope for 3%. If I'm investing in Dayton, Ohio, I'm gonna want 15%. Every area has a again, different set of data, different dynamics. You just have to see what your market is offering up and go with that. You can't change the market. That's one of the big mistakes a lot of people make is they try to say, well, this is what I want. I'm like, well, you might not get that where you are. If you're in like literally in the Bronx or Queens or Brooklyn, for example, right over the river from you, you'd be lucky to get 5 or 6% and be glad about that. But remember, cash flow, the cap rate reflects risk and reward. So the lower the cap rate, the lower the risk, the lower the reward too, but only on the surface. Okay, if you hold a property long term up there, which I would definitely be doing if I was you guys right now. Any of you guys are up in New York, Queens, Brooklyn, Bronx, Long Island, Manhattan, right over the river in Tenafly, or any of the New Jersey towns within an hour's drive of New York. Man, huge capital plays up there right now. Income is shooting. I mean, the rents are going up like crazy. It's like watching an escalator go up in a mall. That's how fast the rents are increasing up there, which drives up the values of the property. So lock in, and don't ever think, well, I missed a boat. No. The economic cycle keeps going around and around and around, and if you keep waiting for the perfect opportunity, you're gonna basically wait your whole life for nothing. Okay, you've got to jump in when you can jump in. There's no better time to start than yesterday. I hear a lot of people say that I can't invest in my area. It's this or that thing. I say, well, that's crazy. Somebody's investing up there because 70% of the people rent. That means 70% of the properties are owned by investors. And no, they weren't all bought 100 years ago. There's properties changing hands every single day. So in any case, Faisal, like for me personally, I'd love to get 20%, but I know that that's not realistic in most areas. So wherever I'm investing, I go with what the market gives me, because I know if I'm only getting 3% cash flow, I'm probably going to be getting 15% capital appreciation over a 5 or 10 year period, and I'm willing to take that bet, particularly right now. So keep that in mind. That's why you always want to look at that. If you look at the rental property reporter, the online calculator, see, that helps you see that picture, because it accounts for not just rental income, but also capital appreciation. See, that's the thing about the opportunity evaluator. That's great at showing you current income expense, and you can do a lot of what-if scenarios. Rental property reporter, man, that's the place you go to if you want to account for the whole picture of rent and appreciation. And really, a lot of savvy investors, they like that one anyways, particularly people from a stock and bond background or financial planner background. That's the place to go. So really, Faisal, you've got to, the answer to your question is it varies region by region. I'm going to suggest 8% in your area, but you've got to look and see what the market's offering and tell your investors this is what the market's offering. You can't make something out of nothing. If your market's given up 8% and your investors are saying, I want 15%, either they're going to be searching to the end of the time or go outside the area. And you can go into Pennsylvania, in the outskirts of New Jersey and outskirts of New York, and find areas like that. You just have to go outside the area, I guess is what I'm getting at. In any case, these are great questions, guys. We got way off subject, but I don't mind as long as you guys are okay. We're covering really good, solid material here. It's just not what we wanted to talk about tonight. But again, it's open Q&A, so this is your hour. My job is to simply provide assistance and guidance and information and where to go find information, that kind of thing, no matter what the subject is. So I'm thrilled by this, actually. Okay, I think we're caught up on questions. Let me go to the next thing here. Hang on one second. All right, let's do this, and we'll save the other. The other thing I was going to go through about how you actually sell a contract. We'll do that next week, guys. I promise you that. But let's try to get through this, because this is a great checklist. And the reason I want to do this is a lot of you actually are involved as wholesalers now. I just want to make sure if you want to wholesale, that you follow this guideline. It's basically a order of events. So let me reduce my panel real quick here and go back to this. All right. So number one is, if you're going to be involved in wholesaling, possibly you want to wholesale yourself. And the answer is yes, you can, even as an agent. And if you're not sure, don't ever assume and guess. This is one area of real estate, guys, where you really can you can ruffle feathers. That's why Rhonda's broker is probably leery of it, because maybe they've had a situation in the past where an agent didn't know what they were doing or an investor didn't know what they were doing. So I would read the Wholesaling So Everybody Wins book, and later on, it's February, March, if you guys want to take that program, feel free, just ask. We'll put you in the first group and give it to you for half price. But let's go through first things first. I just want to make sure you understand what it is you're going to be dealing with if you decide to do that. Okay, checklist. And by the way, I will make sure we send this out with the recording that Beverly sends out. So, and the other one too, by the way, the blueprint. All right, first things first, determine what your goals are. If you're going to be involved with wholesaling, ask yourself why. And keep an open mind. There's good answers and there's negative answers and there's positive answers. There's some, just like anything in life, there's a yin and the yang. You just can't get away with it. We love our cars. They give us from A to B, but they take a lot of money to operate and gas and insurance and the whole 9 yards. Yin and yang. So wholesaling is, what happens is you can earn money wholesaling, but at no time are you ever actually owning anything. Okay, when you wholesale, you can generate cash flow, but there's no equity. All right, that's why I stopped doing it at some point. For one of the reasons, because I realized, man, I'm working, I'm generating cash flow, but I have no ownership. Okay. That's the downside. The upside is, if you have no capital and you have no cash flow, it's a great way to get involved with investing. In your cases, most of you have licenses. I suggest you use your license to generate commissions and wholesaling fees, okay? So first things first, determine your goals, all right? Next thing is to set up your business structure. If you're wholesaling and you're involved yourself directly, you never want to use your own personal name. Never be involved as a sole proprietorship, okay? You always want to set up an LLC, and the LLC is basically the entity that's getting properties under contract and selling properties, okay? Now remember, some of this is the high levels covered in the book, much more detail in the training program. That's number 2. Number 3 is either find the right kind of realtor or become one. Most of you who are investor agents, you have access to wholesaling material, at least at the high level for free, and of course the training program coming up for half price. But master the skills, master the art of the game, the art of the deal. All right, so you, either as an investor agent or your wholesalers who are going to rely on you, have a much better chance of generating a profit and eliminating or reducing risk, okay? All right, number 4, determining what areas you're going to be in. Now, the good news is, remember I said fundamentals don't change? Same thing here. Everything you learned in Module 1 and Module 2, whether you're in the investor agent program, flipping for profits, or rental profits programs, even the property management program, turning rental problems into real estate profits, we always cover the basics first. In this case, it's Module 1, all right, and in this case, also Module 2. Module 1, how do you locate the properties in the right areas? Module 2, how do you analyze them, okay? So that's, you got to determine the areas first, okay? That's Module 1. The next thing you want to do is this. Before you actually get anything under contract, you want to make sure you have your buyers lined up. So if you think about the diagram I showed you earlier, whether you're a wholesaler or an investor agent, you always want to have your buyers first. You've got to locate them, get them under buyer's agency agreements, make sure they're qualified. Remember, interview them and qualify them. That goes back to Module 2 in most cases, all right, of the training programs. Interview them, qualify them, engage them through a buyer's agency agreement, okay? That's the next step. The 6th thing is once you've done all that, now you can dig deep and find out what are their needs, the people who need the properties. What are they looking for? Are they looking for rentals? Are they looking for flips? Are they looking to live in a home themselves? Whatever they're looking for, you've got to determine that and document it every single time. You should be able to pull up a folder on every client you have and bring up individual files based on subject. File number 1 should be, what is it they like to do? Do they like to flip homes? Do they like to do duplexes? Do they like single-family rentals? Do they like big apartment complexes, storage facilities, whatever the case is? That's what you do in step number 6, all right? Step number 7 is, now you can go fill the order. So number 6 is you determine what the needs are. You get the clients to place their order. Number 7 is you finally go use what you did in step number 4. You determine what areas to work in. You go out there and start digging in there. You find the property. So this is where you're going to kind of separate yourself from the herd, okay, and most of the traditional agents who really not sure how to make all this work. You're going to know how to identify the properties in the right areas, and know how to analyze them, okay? Now, one of 2 things is going to occur at this point. Either you're going to get them under contract yourself, or your wholesaler is going to get them under contract, depending on what role you're playing here. But essentially, you've got to get the properties under contract. You go find them, you analyze them, you make your offers, and get them under contract. Okay? The next thing you do is, obviously, you're going to go sell the contracts. Again, this is either you as a wholesaler who happens to be an agent, or your wholesaler is doing this with you representing them. Again, you're collecting commissions on both ends, and also the fee from the marketing fee from the wholesaler. So, in any case, this is really the checklist you need to keep with you to go through the process. If you do any of these out of order, quite frankly, you're going to be hamstringing yourself. I know it can be frustrating to think, well, I got to do all that stuff first. Well, the reality is, if you build a solid foundation, the results are always better. I mean, you always have a better home built on a solid foundation. In this case, you've got a better wholesaling business built on a solid foundation. By the way, I just remembered something. Remember I mentioned the name Kelly O'Keefe that you should have, hopefully you wrote down. If you go out onto the membership section, you're all in the silver level. Look for the recorded interviews, and we actually interviewed Kelly O'Keefe. And she'll describe in there what she does, which is what we just described here, and how you can profit immensely from working with wholesalers. So I recommend you do that. In any case, back to this. You get the properties under contract. You present it to your buyers, which we will go over next week, okay? And sell the contract, and you earn commissions and you earn wholesaling fees. All right, let me bring my panel back over. Let's see what kind of questions we generated, because I know what I just did is going to generate a lot of questions. Okay, this is Maria. Maria says, where did you say the interviews were? Okay, so Maria, once you've been in, I think you may have just joined this month. At the end of every month, what Paul does, our web developer, is he loads all the students from that month into our membership section, silver level, and on there has all the previously recorded interviews. Most of them are what we call expert interviews. They're people who are investors or other agents, many of them not even from our program, because we always want to be fair and balanced and provide other views. And some of our students we obviously have interviewed too. But you also have on there, by the way, all of these webinars. Like tonight's webinar is being recorded, and Paul's going to load that webinar up within the next week or two. If you look on the database, you'll see probably, I don't know, I'm guessing maybe over 100 webinars, and they're all loaded onto the database and cataloged by subject type. So you can listen to them. I think you can strip off the audio. Again, you can watch them on your phones if you get the app on your phone, all for free, okay? And you can dig into any subject you want and immerse yourself. Some of the subjects are out there multiple times, okay, which is pretty neat. So in any case, let's see what other questions we have. Good question, by the way. Okay, this is from Shauna. Shauna asks, what is a typical marketing fee? Is it a percentage? Yes. And we actually like to see you charge 10%. Now, the 10% is of the wholesale fee that the guy's getting, the wholesaler's getting. So let's say the wholesaler earned $10,000 by signing the contract, selling the contract. You would get $1,000 of that, okay? And that's the kind of the going rate. It could vary depending on where you are geographically, but that's the going rate. Your fee, because you're representing them contractually, you're helping to bring parties together. I mean, you're planning, even at just that very essential level, you're providing a valuable resource, okay? And if you get really more involved, like we described in the first part of tonight's webinar, by finding the properties, finding the buyers, man, you can see how you can generate a lot of cash flow just from this one method. And we have agents who just do this, by the way. And again, it's a good question. Okay, let's see here. Let me check for others. As Maria says, thanks. You're very welcome. Well, guys, that was what I had for tonight. Excellent night for Q&A. I love it when you guys are more active and more lively. And so thanks, Faisal. And Nick, by the way, Nick, do you normally like to go by Nick, Nico? I don't want to dishonor your name. Nicoduans, you know the pronunciation, that would be wonderful. I just want to make sure I honor your name now and forevermore. So, in any case, guys, let me just check here and make sure one more time that we are caught up on questions. I don't want to cut you off short. And while we're looking for that, I want to wish you all a happy Thanksgiving. I'm at my father's house in Washington, D.C. I just got here a couple hours ago, so I'm going to go down and enjoy a little bit of time with him. And I will not be teaching. I'm not teaching at all this week. Oh, by the way, speaking of teaching, okay. Next week I've got my own training. The week after that I will be in Alabama. So for those of you who are in, let's see, Huntsville, where else did I teach here before? Southeast of Birmingham. Can't think of the name of the town now. But for any of you in Alabama who want to drive to Birmingham, I will be there on the 6th, 7th, and 8th, 3 different offices, and I go down to Gulf Shores on Friday the 9th of December. The following week I will be in Atlanta. Actually, the following 2 weeks I'll be in Atlanta. The weeks of December 12th and December 19th, I'll be in Atlanta. For all the folks in Atlanta or anywhere around Atlanta, look me up, hook me up, let's get together. If you got a workshop going on, please invite me. I'd love to come speak at it. Doesn't cost anything. And if you just want to get together as a group, we've done that before and formed masterminds that way. Matter of fact, some of you guys in Atlanta are ready for a mastermind. If anybody wants to take the lead, I'll show you how to initiate it, get it started. I'll facilitate it for you, and then we'll hand it off to you, okay? And if you bring pizza, it'll be even better. Matter of fact, I'll pay for the pizza. How about that? Okay, guys, that's pretty much it for me. Let's laugh out loud. Hey, Liv, I'm serious, man. I want to meet up with some of you guys. So keep me posted. In the meantime, you guys have a blessed Thanksgiving with you and your families. God bless you all, and I will see you next Monday night. Okay, bye-bye.